What's up, cover girls? So in the last 2 months, inflation has started to come down a little bit. And I think, and if you're a fan of Milton Friedman, he would also say inflation normally is directly correlated with M2. And M2 is the broad monetary money supply here in the States. M1 just refers to cash and checks, so M2 is a broader scope of the money supply here in the States. And with that now decreasing month over month as the Federal Reserve is trying to quantitative tighten as opposed to quantitative easing, which we've done for about basically the last 12 plus years, it is starting to curb inflation, which really from a couple different perspectives, that's a good thing. However, and I was listening to Bloomberg yesterday, and there was a really smart analyst that was talking about potentially the environment that we're going to find ourselves in next year, and that is negative operating leverage. So basically, as your fixed costs go up, this year, obviously with the economy still functioning fairly well and businesses increasing their sales, at least from a nominal perspective because of inflation, their fixed costs have gone up because a lot of headcounts have gone up and things of that nature. The problem with negative operating leverage is not only are your fixed costs going up, in that environment, your sales go down. So, and the reason that this analyst was talking about that and foresees this type of future is our consumer savings percentage is back at 2005's levels, which is a historic low. I think it was 2.7% is now the U.S. consumer savings rate. And as you guys know that follow the channel, 70% of the U.S. economy is driven by the consumer. So potentially we are heading into a pretty big headwind, which would be negative operating leverage, which some would argue is actually maybe even worse than inflation. So we'll see where we end up going. Again, we'll see if M2 is, and the decreasing M2 is going to bring down inflation. We'll see if any of those kind of precedents still matter in a post-2020 world. I think it's going to be really interesting to see, because rent is normally a lagging indicator. So in that there's a lot of inflationary stickiness to that, and same with wage growth. Again, wages continue to go north because there is a lack of labor supply. So it is interesting now versus when Milton Friedman was here, there wasn't nearly this much quantitative easing for this long. So we'll see if we're just in a completely new normal or not. But just be on the heads up, I think inflation might be coming down. However, that might lead us into what some analysts say is negative operating leverage. So stay tuned for more. Comment down below if this surprised you. But again, I thought that this was really relevant information that I wanted to get out there and kind of pick your brains and see if you guys agree with this analyst, or again, if you think that this is just completely off basis. So let us know in the comments.